Hello everyone, welcome to Mastery. It's Rosario's Academy. In this session, we're going to discuss about final accounts with adjustments. During our previous discussion, we have discussed about how the final accounts are prepared and what is the purpose of preparing the final accounts. What are the two major elements are there in the final accounts when the final accounts are prepared in detail. Now we're going to discuss about adjustments. What does it mean by? Normally, adjustments are carried out at the end of the financial year after preparing the trial balance, after closing all the ledger account balances. So, by considering the ledger account balances along with the adjustments, final account should be prepared. Adjustments are made through adjustment journal entries. Adjustment journal entries are the journal entries which we do not find at the ledger account, because after closing the ledger account only we are finding or we are having the adjustments. Let us take an example. Salary outstanding. Okay, at the March, on 31st March, we are closing all the ledger account balances and we are preparing the trial balance in order to prepare the final accounts. At the end of the 31st March, we are having outstanding salary. Its nature is representative account nature. Okay, personal, representative personal account nature. Okay, so salary outstanding. What does it mean by salary outstanding? On 31st March, normally the March month salary would be given. For many companies, normally the March month salary would be given by the first week of the April. So, even though it is paid at the next financial year, it should be added with the the current financial year, isn't it? Then only it should be matched. So the adjustments are made, adjustments are treated based on the principle of matching principle. According to the matching principle, revenue earned should be compared with the expenditure incurred for that period itself, isn't it? So, since it belongs to the current financial year, it should be added, it should be included with the salary account. Okay? So, with the view, adjustments are made in the books. So, we should make the adjustment journal entry, because journal entry is the primary entry, isn't it? Journal entry is the original entry. As soon as we come across a transaction, we are making the journal entry, isn't it? So, here, even after closing the ledger account balances, even after preparing the trial balance also, we have no other choice. The procedure would be we should record it in the journal proper. So we have to make the adjustment journal entry. Then we should give the treatment in the final accounts along with the corresponding ledger account which exists at the trial balance. Okay, so normally adjustments are given outside of the trial balance. Apart from along with the ledger account balances, we should take into consideration of the adjustments which are given outside of the trial balance. Corresponding adjustments should be considered, and by clubbing both the things, we should make the final accounts. Then, normally, the ledger account balances which are there in the trial balance would be reflected at a single time in the final accounts. Either it is in the first part or it is in the second part. Either it is in trading or profit and loss account or it is in the balance sheet. But when it comes to the adjustments, it would be reflected twice in the final accounts, both in the first part as well as the second part. Trading or profit and loss account and balance sheet. So this is what the major thing that we should keep in mind when we are preparing the final accounts. The things which are given outside of the trial balance only treated as an adjustment. Okay, let us get into the first adjustment, that is closing stock. If the closing stock is given inside of the trial balance, then it is understood that it has been already adjusted with the purchase accounts, so we need not to give any adjustment journal entry for that account, that is closing stock account, because it has been already adjusted with the purchase account. In case if it is given outside of the trial balance, then it is treated as an adjustment. It is unadjusted. So we should give the adjustment treatment for the closing stock. I hope you got some basic idea, isn't it? Let us discuss in detail. So the first treatment would be closing stock. Closing stock, if it is there in the adjustment, that is outside of the trial balance. Okay, so the adjustment journal entry, we have to record it, isn't it? Because it has been already, the adjustment journal entries are the journal entries which are omitted, which we do not find at the already closed ledger accounts, isn't it? That we have discussed already. So we have to record it through the adjustment journal entry. So the journal entry would be closing stock account debtor to trading account. So trading account. So closing stock account debtor to trading account. This is what the first adjustment entry that we have to record in the journal proper. Then when it comes to the final account statement, as I mentioned you earlier, adjustments, whatever the adjustments it may be, it should be reflected twice in the final accounts, both the part. So the first part would be, so how the reflection on first part, trading account. So at the credit side of the trading account, it would be reflected by closing stock. Closing stock is otherwise called as stock in trade. Okay, then the second treatment would be on balance sheet. Okay, on balance sheet, at the asset side, under the subcategory of current assets, it would be placed closing stock. Okay, so this is what the treatment, this is what the treatment for the closing stock if it is there in the adjustment. Normally you will be given this is the first adjustment as a first adjustment. Okay, for your examination. Okay, then when it comes to the closing stock value, what would be the value would be considered? If the cost value is lesser than the net realizable value, then the cost value would be taken into account. If the net realizable value is lesser than the cost value, then the net realizable value would be taken into account. That would be the closing stock value. Whichever is lesser, whichever is lower, that would be taken into account. Okay, I hope you got some basic idea about how to treat the closing stock adjustment. Let us discuss more adjustments in our forthcoming videos. Thank you so much for watching.